What if the biggest investment opportunity of this decade is actually designed to make regular people buy at the perfect time for somebody else to sell? Because right now, people are treating the SpaceX IPO like a once-in-a-generation opportunity. Elon Musk, rockets, Mars, artificial intelligence, satellite internet. The company many believe could shape the future of humanity itself. And if there is one thing investors hate, it is missing the next Tesla. That fear alone is powerful. The fear of watching something explode in value while you sit on the sidelines thinking, I could have bought in earlier. But what if this story is not as simple as it looks? Because behind all the excitement, some investors are quietly asking a much more uncomfortable question. Why does this IPO suddenly feel perfectly timed for public money to rush in? And here is where things start getting strange. Because even if you have absolutely no plans to buy SpaceX stock, there is a chance you could still end up owning it anyway, through retirement funds, index funds, passive investing, without ever making the decision yourself. Now, this is not one of those videos screaming that SpaceX is a bad company. In fact, that is exactly what makes this so complicated. SpaceX might genuinely become one of the most important companies in modern history. But sometimes, the investments that look the safest become the easiest places for people to stop asking hard questions, especially when hype becomes bigger than logic. And right now, something about this IPO feels different. Strange valuation questions, quiet structural changes, growing excitement, and a feeling that regular investors may be walking into something they do not fully understand yet. So before you ask, how do I buy SpaceX? Maybe the better question is this. Why are some people starting to call it a trap? Now, before we talk about why some people are calling this IPO a trap, we need to understand something important. Why are people so willing to ignore the risks in the first place? Because right now, SpaceX is not being treated like a normal company. It is being treated like a once-in-a-generation opportunity. And that changes investor behavior. Think about it. Most companies sell products. SpaceX sells something much more powerful. Belief. The belief that humans could one day live on Mars. The belief that rockets can become reusable. The belief that internet from space could eventually connect the entire world. And whether people want to admit it or not, Elon Musk has earned a level of trust very few founders ever get. Tesla looked impossible. People laughed. Then Tesla happened. Reusable rockets sounded ridiculous. Then SpaceX made them land themselves. So naturally, millions of investors are thinking the exact same thing. I missed Tesla. I am not missing this. And honestly, that may be the most dangerous sentence in investing. Because once fear of missing out takes over, people stop asking better questions. Questions like, why does this IPO suddenly feel perfectly timed? Why are concerns about valuation getting brushed aside? And why are some analysts quietly warning that regular investors could end up becoming liquidity for people who got in much earlier? That is the strange part. The excitement feels natural. But some of the mechanics underneath it do not. And history has shown something uncomfortable about markets. The moments that feel the safest are often the moments when people question things the least, especially when the story becomes bigger than the numbers. Because right now, most people think they are investing in the future. But what if the version of SpaceX people are imagining is not actually the business they are paying for? Because once you look under the hood of SpaceX, the story gets a lot more complicated. So, what exactly are people buying into? Because if you asked most people what SpaceX actually is, the answer would probably sound something like, oh, the rocket company. And that sounds right. Until you realize rockets may not even be the most important part of the business. In fact, this is where the SpaceX story starts getting much stranger. Because one of the biggest risks in investing is thinking you understand a company when you are actually investing in something completely different. And that matters here. Especially if millions of people may eventually end up owning this stock through retirement funds and index investing without fully understanding what is actually driving the business. Because SpaceX is not really one company. It is multiple businesses stacked together, and they are not equally valuable. First, yes, there is the rocket business, the part everybody knows, NASA missions, satellites, rockets landing themselves like something out of science fiction. It is impressive. But here is the weird part. The business people talk about most may not be the business investors care about most, because while rockets get the headlines, something else may actually be paying the bills. Starlink, And this is where the story changes completely. Because Starlink is not just internet from space. Think bigger. Imagine building an internet company that can reach places traditional providers cannot. Planes, ships, rural areas, entire regions with weak infrastructure. Now imagine charging millions of people every single month for access. Suddenly, SpaceX starts looking less like a rocket company and more like a giant global subscription business hiding inside a space company. That is the part many people miss. And honestly, that is also part of what makes this IPO feel so dangerous. Because revolutionary stories have a habit of making investors assume unlimited upside. People stop asking, how much growth is already priced in? How perfect does execution have to be? And most importantly, are investors paying for the business SpaceX is today, or the dream of what they hope it becomes? Because once expectations become too big, even incredible companies can become expensive mistakes. And when we start looking at the numbers behind this valuation, things begin to feel a lot harder to justify. Now, this is where things start getting uncomfortable. Because none of this automatically means SpaceX is a bad company. In fact, that is exactly what makes this conversation difficult. Bad companies are easy to avoid. Great companies are dangerous. Because great companies make people stop asking hard questions. And SpaceX might genuinely be one of the most important companies of this century, which is exactly why the valuation matters. Because at some point, every investor has to answer one uncomfortable question. How much is too much? Think about it like this. Imagine someone offered to sell you the greatest house in your city. Perfect location. Beautiful design. Everybody wants it. And deep down, you know demand for this house will probably keep growing. But then they ask for 10 times what it is realistically worth. Suddenly the question changes. You are no longer asking, is this a great house? You are asking, am I paying too much? And that is exactly where the SpaceX debate begins. Because depending on where private valuations land, SpaceX could debut larger than some of the biggest companies on Earth. A company still figuring out parts of its business. Potentially priced like perfection already happened. And here is the dangerous part. Markets do not punish companies for being bad. They punish expectations for being unrealistic. That is the difference. When excitement gets too high, investors quietly stop betting on success and start betting on flawless execution. No delays, no competition, no disappointments. Everything goes perfectly. And once markets start pricing perfection, even incredible companies can struggle to justify the hype. That is what makes this so uncomfortable. Because SpaceX might actually succeed. Starlink may grow massively. The business could become bigger than many people imagine. And investors could still lose money. Not because the company failed, but because the price they paid assumed the future would unfold perfectly. And before you think, well, if people want to buy it, that is their choice. Here is where the story gets strange. Because what if millions of people end up buying SpaceX without ever making that decision themselves? So far, this might sound like a normal investing debate. Some people think SpaceX is overpriced. Others think it could become one of the most important companies of this century. Fair enough. But what if the valuation is not actually the strangest part of this story? What if the real question is, who ends up buying SpaceX and when? Because this is where things start getting weird. You see, most people imagine investing as a choice. You research a company. You like the business. You buy the stock. Simple. But that is not how a huge percentage of money moves in markets anymore. Today, trillions of dollars flow through retirement accounts, index funds, and ETFs. And many of these funds do not make decisions the way most people think. They follow rules. If a company becomes big enough and qualifies for major indexes, money automatically starts flowing in. No opinion, no debate, no moment where someone stops and asks, wait, is this actually worth the price? The system just buys. And here is why that matters. Imagine millions of people contributing to retirement accounts every month without realizing a small percentage of that money may eventually end up flowing into SpaceX. Not because they researched it, not because they chose it, but because index funds quietly bought it for them. That changes the story a lot. Because suddenly, demand does not only come from excited retail investors chasing Elon Musk hype. It may also come from automatic buying pressure, passive money, retirement money. Money that keeps flowing whether the valuation makes sense or not. And this is where the thumbnail starts making a lot more sense. Because critics are starting to ask a very uncomfortable question. What happens if regular investors become the buyers at the exact moment early insiders finally get liquidity. Think about the incentives here. For years, early investors, insiders, and private shareholders have been sitting on shares they could not easily sell. Then suddenly, public excitement explodes. Headlines everywhere. Fear of missing out spikes. Millions of investors rush in. And potentially, automatic retirement money follows. Now step back and look at that picture for a second. Who benefits most when excitement is highest? That is the question people are quietly asking. And before you dismiss this as impossible, history has shown markets do strange things when massive excitement meets automatic demand. Which raises an even bigger question. Is SpaceX really entering the market at the perfect moment? Or has the market been perfectly prepared for SpaceX? Now, after hearing all of this, you might be thinking, okay, so is SpaceX actually a bad investment? And honestly, that is the wrong question, because this is where things get complicated. SpaceX could genuinely become one of the most valuable companies on Earth. Seriously. Starlink could continue growing globally. Space infrastructure could explode over the next decade. Government contracts could expand. AI ambitions could pay off. And if Elon Musk somehow pulls off even half of what people expect, SpaceX could become much bigger than it is today. That is the bull case. And it is not crazy. But here is where smart investors start disagreeing. A great company does not automatically mean a great investment. Timing matters. Price matters. Expectations matter. Think about it like this. Imagine someone offered you ownership in the future. The most exciting technology. A revolutionary company. Massive long-term potential. Sounds incredible, right? But then they ask you to pay a price so high that almost everything has to go perfectly for years just to justify what you paid today. Suddenly, the investment feels different. Because investing is not just about being right. It is about being right at the right price. And history has a brutal habit of punishing investors who confuse great stories with guaranteed returns. We saw it during the dot-com boom. Amazing companies, revolutionary technology, real innovation. But many investors still lost fortunes because expectations moved faster than reality. That is the part people forget. A company can win, and investors can still lose. Now combine that with everything we talked about earlier. Massive hype, automatic buying pressure, retirement money potentially flowing in, limited public shares, and a level of excitement that makes people feel like missing this opportunity would be a mistake. Suddenly the question changes. This is no longer, will SpaceX succeed? The real question becomes, if SpaceX succeeds, who actually benefits most from when regular investors finally get in? Now here is what makes this whole story so complicated. SpaceX might actually become one of the most successful companies of this century. Seriously. That is what makes this so uncomfortable, because smart investors are not arguing over whether SpaceX is impressive. It obviously is. The real disagreement is something much harder. Are regular investors being invited into an incredible company at an incredible price, or a dangerous one? Because both things can be true at the same time. SpaceX could dominate space infrastructure. Starlink could become a global internet giant. The company could grow far beyond what critics expect, and investors could still lose money. That is the part people misunderstand. A company winning does not automatically mean investors win too. History is full of revolutionary businesses that changed the world, while investors who bought too late paid the price. And when you step back, this is the uncomfortable picture starting to form. Massive hype, a tiny public float, automatic buying pressure, retirement money potentially flowing in, and insiders finally getting liquidity at the exact moment public excitement may be highest. Maybe that turns out perfectly fine. Maybe SpaceX becomes one of the greatest investments ever. But if there is one question worth thinking about before this IPO arrives, it is this. When everybody suddenly wants access to the future, who is selling it to them? Because sometimes the most dangerous investments are not the ones people fear. They are the ones everybody feels lucky to finally buy. And that is what makes this feel less like an opportunity and a lot more like a test. A test of whether investors are buying a business or simply buying belief. If you enjoy breaking down the hidden side of money, investing, and financial systems, the stories most people only understand after the damage is done, subscribe. Because the biggest financial lessons usually become obvious right after they become expensive.